Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 278 on 7th of September. Can you believe that we can have a 90% fall in a Nifty stock? So psychologically, we are so tuned to believing that all Nifty stocks are very high quality stocks and no major harm can happen in a Nifty stock, that we forget that all kinds of stocks also enter the Nifty. Of course, all large caps, but within large cap names there can be massive falls at times. Over the last decade or so, maybe 25-30% of Nifty stocks or even more have changed, solely because there are a lot of laggards. Over time, businesses get disrupted, even large caps, and the index committee every 6 months when it meets will change the index. So Nifty is like a momentum index. Winners are allowed to run and losers are let go. So we'll talk more about index formation and index laggards in this show later on. But first a look at the markets. So again, that iffiness in the market continuing. We are still very near that breakout point, but not yet breaking out. I think any day that can happen, that Nifty will go a couple of 100 points above that and gap up and stay up above that. But the global headwinds is causing Nifty to not do that right now. And you can see that these sectors that have been extremely strong, autos, private banking, energy, they all have actually seen some profit booking at this point. So we don't really know whether we will cross over or not, but the setup is there to anticipate and to, for those who are trading the Nifty, to be ready for that kind of a move. Of course, the other way also can happen. Pharma stocks actually did well today, 0.8% up. Public sector enterprises, there's a lot of news or let's say noise around privatizing a lot of public sector enterprises and going through the divestment program, etc., and that's causing many of these counters to flurry up. Commodities also doing good. Metals I thought would have done better today, given the news from Europe, etc., that plants are shutting down, but the kicker has not yet come in. IT stocks up slightly, along with FMCG, but nothing great in that particular sector. So overall, a reasonably dull day with Nifty closing at 0.18% minus, but small pockets of outperformance and underperformance. You can see here small caps up 0.8%, mid and small cap also 0.62% up. So the breadth of the market was reasonably all right. Nifty Next 50 also up 0.35%. But the major indices, Nifty50, CNX 200, CNX 500, all very flat or slightly negative. In terms of the weekend investing, small cases, MI25, MI35, MI50, all small cap oriented, did very well on the back of small cap move. MI20, MI30, NNF10 still in positive, and rest were mildly negative, with the India top 10 losing minus 0.44%. This is the heat map of the day. Again, you can see banking and finance here slightly weak, IT kind of flat. Major move upwards in cement stocks after cement prices have been hiked. Autos taking a breather, all down. Maruti, Tata Motors, Mahindra, Eicher Motors, Bajaj Auto, all down. Energy stocks, Reliance down, but ONGC and Coal India up. FMCG mixed bag. And consumption stocks also sort of a mixed bag here, and power sector was sort of muted today. So overall, a reasonably alright day, with Vakrangi clocking 12% gains along with EI Hotel. Web Global also up 10%, Wockhardt and Container Corp also up 8.5 to 9%. On the losing side, GMM Pfaudler, which had risen dramatically a couple of days back, lost 5%. Suntech Realty down 4.5%. Home First, Hathway Cable and Avenue Supermart also lost between 2 and 3%. So one of the sort of insights or tweets, sort of a tweet, sort of thought that I sent through today was about, trying to think about how much pain can you endure in the market. A lot of people, will say that, okay, I'll buy this stock, and even if it goes 80% down, 90% down, I'm okay with it. I'll live through that pain, and on the other side, I may get some multi-bagging done. That's fine, and then that's all good to do. But the question is not whether this will happen or not. This may happen many times in many stocks. Amazon also went 90% down, and Titan went 60% down many times. So many of the stories that will become multi-baggers over 20 years will go through many such ups and downs. Question is not that whether they will go up after coming down or not. Question is whether you can sustain those downtrends. So whether your mental makeup, your conviction, your strategy will allow you to hold on to those, to that conviction when your stock is down 80%. So that is very, very difficult to do. So there are two ways of investing. One is embracing the pain in way of investing, which is the conventional investing, where you buy stock and it may drop to 50%, 70%, 90% down, and you are still holding it with gumption and conviction. That is very much pain oriented. Other way could be a slightly easier way, which we document and we run as momentum strategies, where we don't allow pain to seep in very hard. So as soon as the pain starts to become meaningful, you get out of that stock. So you allow only winners to run. So you stay with the strength in the pack rather than stay with the weakness in the pack and have an endless sort of a assumption or a conviction that I will carry this stock to my grave no matter what. So that, we don't do that because we don't have that kind of pain bearing capacity. But a lot of people enjoy pain, and they have the conviction that yes, my research will come true someday or the other. So if that is the case, then definitely do that. But if you want a slightly more less self-inflicting way, then please try momentum investing. Anyhow, coming back to the topic, big laggards, big drops in Nifty stocks have happened. So this is DLF, and from its highs it dropped like 92%, and at this point it was removed from the Nifty. So I don't remember when it's entered Nifty, maybe somewhere in 2008, but from even 600, 500, 400 levels, it came down to nearly 100 rupees where it was removed from Nifty. So if you are holding a Nifty ETF, if you are holding a Nifty mutual fund, index fund, you would have had exposure to DLF in an indirect way. Why would you want to hold a losing stock just because the product makeup is such that you will have to hold the losers along with the winners? That need not be the case. Again, Lupin is another example. It entered Nifty somewhere around 2013, and it went up 3-4 times from where it entered, and then it retraced dramatically. So it was down maybe 63% before it was removed from Nifty. So you would have lost from 2015 till 2018 mid, you would have stayed invested in Lupin indirectly through your Nifty ETFs or Nifty mutual funds for no rhyme or reason. If you were able to separate out the strength in Nifty and the weakness in Nifty, you would have not bought this or not have held this for so long. Another one, BHEL, I remember this because I was actively buying this and advising this to my clients in the brokerage house in 2002-03, and it was a huge dividend paying stock. It was like I would say like the Adani of today, where nothing could have gone wrong, kind of a thing in terms of the stock move. And it went dramatically from 20 rupees to 400 rupees, something like that. And it stayed in the Nifty all this while. So from 2006 till 2010, there was no contribution towards Nifty in terms of adding any value to Nifty. And then from 2010 till 2017, for the next 7 years, it bled. It was drawing down on the strength of Nifty by staying in the Nifty, and ultimately it was removed in 2017. So this is the kind of drag a lot of Nifty stocks have on the Nifty ETFs or Nifty indices. So while a lot of folks still think that Nifty is supposed to be very, very robust and cannot witness steep falls, let me also share with you that in 2008, I think the Nifty fall was somewhere around 65-70%. That is the kind of index drawdown that we saw in 2007-8. And in 2020 March, I think the index fall itself was 38%. So when indices fall of this magnitude, you can imagine what some individual stocks would have gone through. I mean, if index falls 70%, some stocks would have definitely fallen 95%. So this remains a huge, huge pain point, that despite you believing in the Nifty and its future growth, because Nifty is a momentum product. The Nifty creators meet every 6 months and they do what we do on a weekly or a monthly basis. They remove the laggards and they bring new winners in. But they are very slow in this process. When they meet after 6 months, even then there is no sort of confirmation that the laggards that have been there since last 4 years will get removed or not, because of many other criteria that they have. They don't just have a price volume criteria into that perspective. So we are holding a live AMA session today at 7:30 p.m. and we are going to talk about this exact subject of how to beat Nifty using momentum investing. And we will also showcase many such examples where you could have improved on the your investing in Nifty using certain strategies, or letting go of certain laggards ahead of time. So thank you so much for your time. If you have any further questions on this, please do send us mail at support@weekendinvesting.com, and please do share, like and subscribe to this channel. I think some of your friends can make use of it. Bye.